Welcome. Today, we're diving into a really critical new provision in the Income Tax Act 2025. We're talking about Section 95. Now, before you think, oh no, another tax, let me stop you right there. This section isn't about what to tax, it's about how to calculate it. And it fundamentally changes the game for certain incomes under the head income from other sources. If you're a tax professional, this is something you absolutely need to master.
So let's kick things off with a classic question. You win a crore on a game show. What's the tax hit? Now, while lottery winnings have their own specific rules, they do fall under this big umbrella of income from other sources. This category is a real mix of things, and for some of them, the new act has completely rewired how we calculate the final tax number, and that's exactly what we're digging into today.
Here's how we're going to break it all down. First, we'll look at the old way of doing things. Then, we'll get into the specifics of Section 95. We'll walk through a real-world example, cover what you need to do to stay compliant, and then wrap it all up with the most important points to remember.
Okay, first up, to really get why this new section is such a big deal, we have to look back at what came before. The whole idea of income from other sources has always been this sort of safety net, but the way it works has seriously evolved.
So, under the old 1961 Act, you had Section 56. It was the classic catch-all, right? If an income didn't fit neatly under salary or capital gains or business, boom, it landed in Section 56. The new 2025 Act refines this. The catch-all idea is still there, but now it introduces a very specific method of calculation for certain incomes. The whole goal is to create a more logical system for activities that kind of look and feel like a business.
And that brings us to the main event, the brand new Section 95. This is the engine room of that new, specific approach we were just talking about.
Now look closely at the wording here. You'll notice it doesn't say, this income shall be taxed. No, it's an instruction. It's basically telling us, hey, for the incomes listed over in Section 92, you're going to use the rulebook from a totally different part of the Act. It's a directive.
So here's the key idea you need to remember. Section 95 is a computational bridge. That's the best way to think about it. It connects certain incomes, the ones in Section 92, over to the detailed calculation rules we normally use for business income, which are found in Section 38. This is a complete game changer for figuring out the final tax amount on these specific income streams.
The process is actually pretty logical. It's a simple three-step flow. First, you check, is this income covered by Section 92? If the answer is yes, that triggers Step 2. Section 95 kicks in and tells you to use the business income rules from Section 38. And the result? That's Step 3. You get to apply business-style deductions to figure out the actual taxable income.
Theory is one thing, but let's make this real. Let's run through a practical example so you can see just how much of a difference this new approach can make.
Okay, so picture this. An individual earns 5 lakh rupees from leasing out some specialized equipment. Let's say it's not their main business, just something they do on the side. Now, this type of income is now covered by Section 92. And they also had to spend $50,000 on repairs for that equipment. Under the old rules, what you could deduct might have been a bit limited. But now, the calculation is totally different.
And here is where it all comes together. Look at this table. Because Section 95 points us to the PGBP rules, we can of course deduct the $50,000 for repairs. But here's the kicker. We can also claim depreciation on the equipment, just as if it were a full-fledged business asset. This is a massive change, and you can see the impact right there. The taxable income drops from 5 lakhs all the way down to 3,75,000.
Okay, so we know how it works, but knowing the rule is only half the battle. Let's talk about how to stay compliant and, just as importantly, how to avoid some of the traps people are likely to fall into.
To make sure you're doing this right, here's a quick checklist. First, know exactly which of your income streams are covered by Section 92. Second, and this is crucial, keep meticulous records of every related expense. Third, make sure you're applying the Section 38 rules precisely. And a little pro tip for this transition phase, keep a handy cheat sheet mapping the old section numbers to the new ones. It will save you a ton of headaches.
And here are the pitfalls to watch out for. The biggest mistake you can make is thinking Section 95 is a charging section. It's not. It's just a how-to guide for calculation. The second mistake is the flip side of our example, forgetting to claim those new deductions like depreciation that you're now entitled to. And of course, the classic one, not having the paperwork to back up your expense claims. That'll sink you every time.
All right, let's wrap this up. If you remember nothing else, remember these 4 key things about Section 95.
Number one, and this is the most important, it is a computational section. It's not a charging section. It simply tells you how to do the math, not what to tax. Getting this distinction right is the foundation for everything else.
Second, it's that computational bridge. Its whole job is to link specific incomes under other sources to the well-established rulebook we use for calculating business profits under Section 38.
Third, remember that it's not a free-for-all. This special treatment applies only to the specific list of incomes laid out in the new Section 92. For everything else under other sources, the old logic might still apply. And finally, the bottom line. This change in method is a big deal because it opens the door to claiming more deductions, business-style deductions. For the right type of income, this can seriously reduce your final tax bill.
And that leaves us with a forward-looking question. The real power and scope of Section 95 really hinge on what's on that list in Section 92. So for all of us as professionals, the next step is to really dig into that list and figure out all the implications for our clients.
Thank you so much for joining me for this breakdown of Section 95. I really hope it gave you the clarity you need to handle this important new provision. For more explainers on topics like this, make sure you like, subscribe, and share.
And as always, please take a moment to read our standard disclaimer. Remember, this is for educational purposes, and you should always consult a professional for your specific situation.